Welcome to the weekly Market Watch update for the week of November 28th. Last week, we saw strength in the tech sector, and Fed rate cut bets drove steady equity gains, despite releases of stale economic data. U.S. equities returned 4.77%, Canadian equities returned 4.12%, European stocks rose 3.2%, and emerging markets were up 3.13%, as Chinese benchmarks edged higher amid corporate relief pledges following Hong Kong's fire. Bond markets juggled fiscal discipline and inflationary uncertainty. The 2- and 10-year U.S. Treasury yields fell 6 and 9 basis points respectively, and in Canada, the 2- and 10-year yields were down 2 basis points and up 10 basis points respectively. Canada reported third-quarter annualized GDP growth of 2.6%, escaping what could have been a technical recession after a contraction in the previous quarter. StatCan said the third-quarter number could be subjected to a larger-than-normal revision in February, as some parts of the GDP by expenditure relies on foreign merchandise trade data that was not available due to the U.S. government shutdown. On a month-on-month basis, the economy matched analysts' predictions, following the deceleration of an upwardly revised 0.1% in the prior month, StatCan said, primarily driven by a 1.6% expansion in manufacturing output. But the underlying impacts of tariffs on the economy continued to reflect on business and consumer sentiment. Business capital investment was unchanged in the third quarter, and household final consumption expenditures dropped 0.1% in the third quarter. U.S. producer prices rose in September on a higher energy costs. In the 12 months through September, the PPI increased 2.7% after advancing by the same margin in August. Producer goods prices jumped 0.9%, the largest gain since February 2024, after climbing 0.2% in August. Energy goods, which accelerated 3.5%, accounted for two-thirds of the increase in goods prices. Business activity continued to grow in the Eurozone in November, albeit at a slightly slower pace, hurt by lingering weaknesses in the manufacturing sector. Services activity in the Eurozone inched higher in November, but manufacturing returned to contractionary territory, hitting a 5-month low, the survey said. Thank you for tuning in this week. There's a link in the description for the full article. Have a great week.